Are you tired of some of the more famous trading platforms that are being inaccessible all the time during peak volume hours but still want to trade on an established platform with decent volume? Then OKEx might be something to consider. Hello, I am Adrian for Bitcoin for Beginners. Before we start, please pause the video here first to read our full disclaimer. This video is not investment advice and only contains personal opinions. Especially margin and derivative trading is only for experienced traders that understand these products. The vast majority of retail traders lose money with these type of products. Also, this tutorial is presented to you under sponsorship by OKEx.com. Find the disclosure details in the description. Today we will cover all these topics, walk you through the most important things of the exchange and demonstrate how to place simple orders. Stick to the end for more info about the trading competition and how you can earn benefits by signing up through our affiliate link. First, the 5 crucial steps to get started. If you have no prior experience, first and foremost you need to learn trading and analysis, test strategies through backtesting and practice with paper trading until you have developed a profitable strategy. Not earlier than this you should move forward with step 3. Experienced traders can proceed to step 3 directly. Study the guides on OKEx about the products thoroughly to understand the details and mechanics of each product. Then, when you are ready, watch this tutorial again to refresh your memory. And finally, sign up for an OKEx account. Use our affiliate link that you can find in the description for extra benefits available for a limited time. More on that later. But first, before we continue, if you like our content, please like this video and additionally subscribe to our channel for more of our updates. These are the 10 things you should know before starting trading on OKEx. OKEx is a platform with a wide range of services including spot trading, derivatives, but also a mining pool, wallet and earning interest on crypto. The platform exists already many years, provides hundreds of trading pairs, is available in 100 countries and is in the top 5 of 24-hour trading volume, which means more than decent liquidity available. Unfortunately, US citizens and a few other countries aren't allowed to register. Two abbreviations you will see a lot on the platform are RPL and UPL, which stand for Realized Profit or Loss and Unrealized Profit or Loss. Realized profit or loss means settlement already happened, unrealized means the profit or loss is not yet been settled. Settlement of profit and loss will happen on a daily basis. OKEx applies different fees for the so-called maker and taker orders. Taker orders are essentially market orders and have much higher fees. Maker order fees are much lower, so to save money, ideally try to place limit orders with post only when possible. You can also choose between two types of margin, cross margin and fixed margin. With cross margin, your entire account balance is theoretically at risk with each trade, while for the majority of simple orders, fixed margin is the most appropriate. When a position is liquidated, the maximum loss is the margin reserved for that order only. Preferably use fixed margin unless you are doing more advanced complex strategies. Be aware that OKEx has a system of max and minimum prices for limit orders. Those are displayed in the order form. I'll show you that later. An advantage of OKEx compared to some other platforms is that they offer their futures and swaps with the option of funding the margin with coins, but also with USDT. Also, you should know that each contract has a value of 100 USD or the BTC equivalent, which means that order sizes are a minimum of 100 USD and a multiple of that. Important to be aware of is where the value of the underlying index is derived from. Find price index over here. For coin margins, USD futures and swaps, you find it under token index, for example BTC USD. If you click on it, then you see which exchanges and weight make up the underlying index. And for USDT margined, just click on BTC USDT and you will see the basket of prices making up those futures and swaps. Lastly, OKEx also has a Testnet exchange where you can experiment with the different products and platform features without the risk of losing money, because that account will be credited with worthless test bitcoins. You need to log in separately, but you can use the same account credentials. OKEx offers a wide range of trading services on their platform, like trading cryptocurrencies directly and with margin trading on the spot market. Besides that, a variety of derivative markets, which include the perpetual swaps, futures, but even options. We will look a little more into their swaps and futures offering, because options would require a lot more explanation due to their complexity and specific features. The characteristics of perpetual swaps are that they don't have an expiry date, prices usually gravitate closely to the Bitcoin spot index price, and funding rate is paid by traders each 8 hours, where longs pay shorts or shorts pay longs. Futures are slightly different because they do have expiry dates, On OKEx, futures are expiring weekly, bi-weekly, quarterly and bi-quarterly. Due to the lack of funding rates, futures can trade with a premium or discount on the spot index price, but that gap generally becomes smaller closer to expiration. Let's take a look at the platform itself. Once you signed up, please go to Account, Profile Settings, and set your security features, such as a funds password, which you need for placing orders and to withdraw, and more importantly, Google Authenticator. Under Assets here, you will find My Assets, but first you need to fund it with cryptocurrency. You can either deposit or you can buy it directly through this option, Buy Crypto. You can purchase USDT or Bitcoin. Fill in the amount. If you have at least $100, you will get an extra $10 into your account after purchasing. Just buy now. Then you need to choose one of the external payment gateways, click Purchase and continue the process. Then once you have funds in your account balance, before you can trade anything, you need to transfer your deposited funds to another internal account. You can do this by clicking Transfer, and if you want to trade the Perpetual swap, it needs to go to this account, Perpetual swap account. Under the tab Trade, you can select which product you want to trade. The Academy has lots of tutorials about trading, features and products of the exchange, and under More, you will also find Testnet and other services. Let's look at perpetual swaps first. One of the things that you can choose if you want to trade the coin margins with your coin balance or the USDT margins with your USDT balance. This does have a different impact on how your profit and loss is calculated, so it is important to understand the difference between the two. For perpetual swaps, we will find the information about funding rate right next to the trading pair name. And here in the right corner, we will change cross margin into fixed margin, like this, for reasons that I mentioned earlier. The amount of leverage over here we will determine and adjust when we place an actual order later on. When we want to open a new order, we can use the Open form, which is already displayed by default. And if we want to close an existing position, we click the tab Close and then enter the details for our order. OKEx has a wide variety of sophisticated order types, and ideally you should know what each one specifically does, and the information you can find in the tutorials under Academy. Usually you will place either market orders, regular limit orders, or advanced limit orders. If your trade setup allows it, ideally try to ensure a maker order to save on fees. In that case, you can choose advanced limit order and then post only. Another option is the market order, but those have a higher fee, keep that in mind. The max price and min price are shown under here. Your limit orders can't exceed these, but after time the range will become greater. To even start trading each product, first we need to pass a small test to prove that we understand the basic mechanics of the specific product. Click on Activate Perpetual Swap Trading to move further. Then you can study the explainer and continue to do the test. Click here Start Quiz. Once past the test, we click Activate Trading, and then you can see that we can start putting orders. If we want to trade futures, we would have to do a test again for the futures product. Mostly the same functions, just you can see the different periods available here in the top, and the remaining time until expiration will appear next to the ticker symbol. Like for example, the weekly will end in 3 days and the quarterly in 31 days. Now if we want to see a more sophisticated chart to do our analysis instead of this simple one, we can just click on Chart and it will open a new browser tab with the full chart. We can also switch to Trading View, so we can use Trading View tools as well. Another thing you can do is switch to a different trading screen by clicking Full Screen, but this depends on your personal preference what you want to use. One thing that can also be extremely useful are the extra analysis resources under trading data right over here. This opens up a screen with data like long-short ratio, funding rate trend chart, taker buy and sell, and data from top traders. Specifically, open interest is important for futures trading. Learn about the significance of these charts as well. They can be very helpful. Now, how do you place an order? Before we can do that, we first need to calculate our risk and order size based on our trade idea. Follow this process with me. The very first thing is to decide how much money we are willing to put at risk to lose if we are wrong with our trade idea for this particular trade. Suppose we decide that is $40. This will be our risk amount. Then our trade idea should tell us where we want to enter, for this example a buy long position, the entry price and our stop loss. So let's look at the trading view chart. So the entry would be around here, around 8,910. And we expect to be wrong if the price goes lower than here, well below this wick over here, which means our stop loss will be 7,800. When we have our entry price and stop loss, then we will calculate our risk percentage, and that's the difference between entry and stop loss. Search the price range tool, which is around here. Price range. Start at the entry price, which was 8,910. We go to stop loss 7,800. We have about 12.4%. That is our risk percentage. Now we know our risk percentage. Step 2 is to calculate the position size by dividing the risk amount from step 1 by the risk percentage also found at step 1. So 40 divided by 12.4% is $322. This is the total value size our order should be. Because we can only buy contracts of $100 per contract, we need to divide the order size value by 100 to get the amount of contracts. Or divide the coin price to get the amount of, in this case, BTC in case of USDT margin perpetual swap. You can round it off either to the upside or downside, but keep in mind that this will respectively increase or decrease your eventual risk amount inevitably. My preference would be to be on the safer side, so I round it off to the downside. So in this case, 3 contracts. For step 3, we need to calculate the amount of leverage. Divide 100 by the risk percentage that we found in step 1, right over here. So that's 100 divided by 12.4 is 8.1 times leverage. But the leverage we will actually apply can be conservatively round off to the downside. So 8x in this case. Finally, we are going to use the calculator to check if indeed margin is higher than the estimated profit or loss. If not, we are going to adjust the margin lower until it's higher than the estimated PL. So the calculator is right here. Click on it. Fill in the details. So we have 8 leverage. Open price 8,910. Stop loss is the close price. In this case, 7,800. Number of contracts is going to be 3. Calculate. Alright, we see that margin is not enough to cover our loss, which means we put a lower leverage. Calculate again. Yes, and this should be enough. Alright, let's go to the actual order form, and I will do that on Testnet. So let's change leverage into 7. For the sake of simplicity, we will do a market order, the amount, which will be 3 contracts, then just open a long position. And as you can see, we do have our position opened right now. The next thing to do is to set our stop loss, which will be a stop order. The trigger price is at which price we want to activate it. It's going to be a stop market. And the amount is 3 contracts. And we choose close long position. Here in open orders, you can see our stop loss order. At the time of releasing this video, they are also organizing a trading team competition for which there will be several team prizes and rewards. A link with more information about that you can find in the video description. And then there is also a special promotion for our viewers that want to sign up and use our affiliate link. All viewers signing up and depositing $100 within 2 weeks receive a fee rebate coupon worth $30, which can be used to pay trading fees with. Then the top 10 in trading volume of viewers who have signed up for an account and trade within 2 weeks, they may win $25 in USDT into their account. Please find the details and more info in the description, where you can also find our affiliate link. If you are an experienced trader and you would like to sign up with OKEx, use our affiliate link to register. Some final thoughts that I wanted to share with you. Preferably set stop losses with a reasonable distance before the liquidation price instead of having your positions liquidated, or else you are more likely to be sponsoring the exchange insurance fund. So don't treat leverage margin trading as a get-rich-quick gambling scheme. You are almost certain to be broke real quick. These products are only for people with proper experience and training. Keep in mind that 75 to 95% of retail traders generally lose money. Remember that risk management is key for survival in trading, so trade responsibly. And related to that, I want to quote some wisdom by Paul Tudor Jones, who is a very successful and well-known hedge fund manager, and it goes like this. That's why most people lose money as individual investors or as traders, because of the fact they're not focusing on losing money. They need to focus on the money that they have at risk. How much capital is at risk in any single investment they have? If everyone spent 90% of their time on that, rather than 90% of their time on pie-in-the-sky ideas about how much money they're going to make, then they'd be incredibly successful investors. And I want to leave you with that. Please like this video and subscribe to our channel if you haven't already. We appreciate your support a lot. And stay with us by watching one of our videos that are displayed here.